Okay, hey, creditors. So it was a big victory today, actually. One of the rare ones in Chapter 11. So we're just going to give a little bit of time for everybody to arrive, and then we'll go through some of the major updates that have happened this week, both in and out of court. Azad, are you there? Okay,
Yeah, can you hear me?
awesome. Okay, cool. Okay, so we'll just give it like a minute or so for a few more people to arrive, and then we're gonna get started. Just while I'm doing that, I noticed that when you listen to the recording, you can't really see the pinned stuff. So I've pinned a couple of tweets. There's two tweets that are worth looking at and bookmarking if you don't have time at the top. One of them is the TLDR on all the updates. That pretty much goes through everything that's happened over the last week or so since our last update. And the first one is also all of the play-by-play court hearing. I know Manny asked at the end if a transcript could be provided, and Kirkland said that they'll upload a transcript. But if you want my play-by-play, because you weren't able to attend, we'll be going through that, and we'll try and cover everything that we need to go through. But those are the two tweet threads, and the court thread is just really everything as it's actually happening. So if there's a bunch of typos, I know I got a bit of a ridicule because I said coking instead of coming when referring to the Mashinsky method, but it felt quite appropriate anyway. And yeah, you'll probably know all my typos by now, but it's all good. Makes for some good memes, some good laughs in what otherwise would be a process that you can only cry about. Right, okay. So how many people have we got now, Azar? Does it look like we should get started? I think there's
Um,
1,200 subscribed.
yeah, we've got about 315 joined us now, but anyone who wishes to ask some questions, put your hands up and we'll get you up.
Yes, so start with put your hand up now if you want to ask some questions, but I'll start with the summary. I'm going to cap this at 2 hours. We may end sooner, if we can be efficient. But I'm not going to go more than 2 hours. Sometimes I think we're about to close the other time, and then Jason Stone came up, and then we ended up doing a 5 hour marathon. Going to try and prevent that if I can, because a lot of people they just can't listen to these things because they're too long. Life gets in the way. But let's see what we can do anyway. Let's get that mix right. Always, Aaron Bennett obviously always does a great job of summarizing it into bite-sized chunks. So that seems to be his area, and we seem to cover all the detail and all the questions on these ones. Right. Okay. So I'm going to jump straight into some of the different. So let's start with the court hearing. I'm not sure if we've got David Adler that will be coming up. I know he's probably really in the weeds of doing his borrow negotiations. But I can go through some of the things on the court hearing. And as always, as questions come up, maybe just note them down, put your hand up, and we'll bring you up as we're going through that. If you didn't notice, there was some really big updates. I hope everyone's starting to really come to terms with the different games that are happening in the Chapter 11 case. I think I have a full understanding of the Mashinsky methodology now and the game that he's trying to play. And so I'll give a bit of speculation on that. Because if you didn't hear the news, he's actually started his own ad hoc group, and he's going to be looking to maximize his sell claim, disprove the examiner report, and that methodology can then be used in order to maximize both his shares and his sell tokens. So I'll go through a bit of the moves that could be used as this court has progressed, just so that we can continue to be a few steps ahead. Now, obviously, yesterday when I broke that news, I had the usual everyone saying FUD, but then I guess it was confirmed by some of the people that are closest to Alex Mashinsky, that seems to have always been close to Alex Mashinsky throughout this whole process, despite representing themselves as supporting creditors. All agendas are really fully understood now, And if you don't understand those agendas, I'll try and cover it, and we can create some of those questions. But people that have always said, it's just the numbers. There's quite a few numbers that we can go through today, and also, why there was a sudden uptick in trying to repair Alex Mashinsky's reputation recently, and understand, even though there was a clear understanding that it's completely against creditors' interests in winning our class claims and everything that we have to do. So it's really clear right now, the competing agendas and what games people are playing. And I hope everybody just has a clear perspective. And so I try to release these things as I see them, rather than when they actually become new or when they become actually confirmed, so that everybody can get ahead of it. So that tends to have people calling me FUD. And then when they call it FUD, it suddenly becomes fact. And we saw that with the Mashinsky ad hoc, and how that relates to everything. Okay, cool. So let's go through the court hearing. So the court hearing started with... sorry, I'm on the end tweet. I'm just going to pin the beginning tweet because now I've got to climb all the way back up to the top. Let me pin this. Okay, I've pinned the beginning tweet now. Okay, so it started as usual with Kirkland and Ellis asking Chris Ferraro to go through, and we had some slides that were given last night. I've picked out the 4 different slides, and in previous posts, I went through my analysis of each one. The first slide in the court hearing was just really going through updated stats on Withhold, the custody services and the different withdrawals that have been happening. I think it's pretty interesting what will happen if those people don't. So if you're in custody and you haven't actually settled and you intend to settle, then I believe you've got until the 24th of April. Don't quote me on that. It's in the slides. Maybe I can see it quickly. Till the 24th of April to settle. My understanding is if you don't settle, then you would maintain your right to litigate if you wanted to do that on your own. But you would be lumped up into the earn creditors. That's my understanding. If anyone knows otherwise, then correct me if I'm wrong. So I think the vast majority of have already, like, they've settled. We've had pure custody, and then they will go through the pure custody, are going through their withdrawal process and the KYC side and various other things. So this slide just gave some updates on that. There was some creditors that have had issue because they had right at the end of the court hearing, we had one creditor. It appears that he has multiple accounts. I believe that having multiple accounts is against terms of service. I know it is at Bank to the Future. You can only have one account as an individual, or you can have accounts for your entities. And I think Celsius would have a similar thing where you can't have multiple identities. We know that some people had those accounts and they're transferring coins from their US account to their non-US account. Obviously, there's tax liability there. It's the same person doing the same thing twice. That creates clawback exposure and all these nightmare situations. So hopefully you're not in that. But we noticed that right at the end, there was one suspended account because maybe they had multiple. I'm not sure. I don't want to comment on it, but you may be in those situations. And the judge tried to expedite the process because he came on and explained his situation. And then the judge said, okay, Kirkland, can you make sure you take this or one of the others take it? Okay, awesome. So the next slide was about mining. I gave several comments on there. There's a couple of slides on mining. We're starting to get decent information. I think the pressure that Keith has been applying and various other creditors have been applying is starting to come through to translate into, let's give the information. So I noticed that Chris Ferraro actually defined EBITDA and mentioned that about how, well, just a passing comment on how they're factoring in depreciation. You can go back to those comments there. So, by questioning these financial accounting, we're starting to really get an understanding of the mining operation. And the TLDR is that the sooner we can get a competent operator to put these ASICs to work, the better. Because at the moment they gave some stats, and Celsius had about where is it? I'm just looking at the slide right now. 59% uptime, which is disaster for mining. Now, obviously, they're factoring in the fact that there was this whole core scientific issue, and they've got new hosting agreements. And we know that some of the people that have been involved in the bids that also, I'm not disclosing anything that's unknown, that was also identified themselves in previous court hearings. We know that they've been supporting them, trying to get some of those machines uptime. And so really for a miner, you want to be up in that 80-90% uptime to compete with the efficient operators. And so if we're at like 50-60%, we're getting more and more of these machines online. And so, there's some inconsistencies between the numbers here and what's actually being covered in the coin reports, and that's causing lots of confusion. But now we're finally starting to get numbers. And so, as I said, it's really about putting these ASICs to work with competent operators. So it's obvious that, Celsius in Chapter 11 is giving just the most inefficient process. We need them out of Chapter 11. We need competent operators that know how to put these machines to work. And we need, a roadmap for getting these, what's meant to be, I don't know how many have been sold because of inefficiencies, but was meant to be 120K rigs. And Chris Ferraro gave an update on this. He reckons that by May, there's going to be 68K of these ASICs deployed. Sorry, 58K by May and 68K by June. And so it looks like, each month they're going to be able to get 10K of these rigs deployed. And hopefully that takes us over to a competent operator. And we can start to see, I know Keith has done a bunch of DD on the relationships between who's hosting these and who may be involved in the bidding processes and stuff like that. So you might want to check out some of his speculation and updates. But the key thing here is uptime and then getting them deployed more efficiently. So I really, for one, cannot wait just to get through this process. The real killer in this whole process has just been these machines gathering dust. When I've been mining, you get the most efficiency in your first year, and then it dwindles every year from there. So the sooner we can put these to work, we've got to get them to work this year. The sooner we can start to, actually make this whole mess into something useful, proof of work, so that we can start to generate a recovery through some kind of equity or income structure. And so those were the key things there. We also got some more color on the revenue streams. And there are some strange things. When they, for example, withdraw from an exchange, they call that revenue. So it's still a little bit murky to really understand the full potential. But at this stage, we're not really discussing like Celsius operating these assets. It's all about one of the bidders understanding the size of these, and then we have efficient operators with regulated structures that can actually deploy these assets and put them to work for creditors, so that we can drive the new business model ahead. As we said, so there's they go through the different revenue streams. They consider selling creditor stable coins. Someone asked me a question on somebody else's space recently. I jumped in, and they asked me about so I think the last coin report and financial forecast said that they're down to 66 million cash in balance. Now remember, there's two different balances at Celsius. There's the coin report, and then there's the operational funds. Now, obviously, those have got really murky because Celsius just took creditors' money and made it their own money, and then combined it with operational funds, and then just went, kind of didn't make any separation between the two. But in the beginning, there turned to be a separation, and then this goes to the intercompany loans and the bad reporting and accounting that led to the mess that we're currently in right now, where we're not sure whether creditors own the assets or shareholders own the assets. But despite that, because they've combined that, you've got a coin report, and now obviously that has a coin by coin value and a dollar value. One of my big fears is that into a bull market, and I always try to warn people about this, the hole gets bigger and bigger in terms of dollar terms. But the higher the price of the coins go up, you can find yourself in a scenario where you can make creditors whole in dollar terms, and then the price going up means that they could just pay you off by buying the coins and paying you off in dollar terms, whether they do that in dollars or in kind. There's a number of ways of doing it. And then the higher the price goes up, the less coins you get because we've entered into a bull market. So I was always keen to get out of Chapter 11 without entering into a bull market, so we don't have to play those shenanigans. And then obviously the shareholders and other parties could then come along and say, well, pay them off, and then the surplus remains within the company. This happened in Mt. Gox, just so you know. There wasn't a tug of war between shareholders and creditors because they didn't mess up the terms of service or have these strange intercompany loans and relationships. But those that lost money in Mt. Gox, they ended up with about 10% of their Bitcoin, which still hasn't come back. But obviously, it went out of bankruptcy because the dollar value of the Bitcoin went up so much that they ended up with multiples in dollar terms, but a very small amount in coin by coin terms. So that's something to be aware of, which is why, again, another indication we've got to get out of Chapter 11 as fast as possible and put these assets to work and hopefully not be in that scenario where additional games can be played along those lines. Okay, so that was the Chris Ferraro update, the interim CEO. Then what did we do? Just looking at my notes and the Twitter. They gave an update. So obviously, if you're following me on Twitter, I gave everyone some heads up. In case you are not aware, I signed an unpaid agreement with Celsius to be a plan consultant. And so Nova Wolf is one of the publicly disclosed bidders. And then they gave some updates. On my Twitter, I said that the deadline was yesterday, the 17th of April, for the bidders to use the stalking horse process. The stalking horse process, for those of you new to it, that originally, if you go back in history, we gave two types of bids at Bank to the Future. The first was a reorg plan along the lines of what Nova Wolf used. And the second was a controlled liquidation where we just distribute everybody's assets and give them the equity in all of their assets. And the second one was obviously leaked. And that happened because obviously Kirkland said that the bids were not successful. And so those got leaked. And that's when we first heard about Nova Wolf. So that's the history there. But now we've kind of reignited the process into a bull market. And there's been some really reputable players. So just so you understand the game right now, the deadline to put the bids in was the 17th. That's done. I don't expect that deadline to extend because we've got some really decent syndicates of companies right now that really want to put these assets to work for creditors. And we've got a mix of the two different models. So Nova Wolf is a reorg model, let's call it that. There's been regular communication with the regulators. There's no sudden surprise here. That's the first model. It's still a massive achievement. One clarification I did want to make as well is some people thought in the bid market on the Provenance blockchain, so they're going to take the equity and put it on the Provenance blockchain. I'm not a fan of security tokens. I'd rather just do straight up equity. That's my preference. That's how we were going to do it in our bid. But this bid is with a security token structure. But because it's actually going to use the bankruptcy exemption, which allows you to issue shares to non-accredited investors, and it's going to be a public reporting company, in terms of bids, if anyone wants to buy these tokens, it's not just qualified investors, so those that have a net worth of $5 million plus. It's actually anyone that can meet the requirement, non-accredited investors as well. So that's just an additional bit of information that I tried to get additional clarity on. And the second type is just simply distributing the assets. So we've got the Nova Wolf bid that we were meant to get a disclosure statement. The Nova Wolf, just so you know, the Nova Wolf guys met all their deadlines, and the UCC and Celsius decided to apply some additional delays. And the reason that they did that is because competing serious bids came in. And so that deadline on the 17th is now done. And we have two or four different companies within this process that can now use the stalking horse process. So we lobbied for a stalking horse. Originally, um, Nova Wharf were going to be given the sponsorship, but now we've got other competent operators, and they're all going to be put in a room essentially between now and when the disclosure statement is meant to be released, and they'll say, okay, these two bids or these three bids are like for like. If you want to improve these terms, they have improved these terms. And so we go into a competitive process where one by one, Kirkland Ellis and the debtor will go across each room and say, improve these terms here. They've offered this. Are you willing to do this? And so hopefully that will generate in a competitive market the best terms possible and make an improvement that we'll see between the initial terms and what actually goes in the disclosure statement. And then they might say to someone, for example, that's doing a controlled liquidation and say, well, we think this makes it more attractive. If you're doing public equity on NASDAQ versus a security token, here's our kind of analysis. And that's what they were trying to say, that it's not like a traditional 365 auction, because not everything's like for like, and it's a complex structure. This was the original structure that we put together, and then I released a video explaining to all the bidders a while back, here's how you can compete with everyone else. And I'm glad to say that Centerview have pulled off that competitive process. The bidders have come in. And so I'm hoping that we get best terms to get out of Chapter 11 as soon as possible and just put these damn assets to work and move on with the regulatory structure. Now, if we don't get a disclosure statement on the 28th, it's not because Nova Wharf haven't done it. It's because we're probably going to get better terms, or they're going to switch the bidder. And so if we don't get something on the 28th, try not to panic. It probably is a good sign, a good indication. Although, we're really at that key point now where things are productive, all of the processes are known. And so that's what it actually means. So they gave a brief update saying that there's, four syndicates, as it were, within the process. And I can personally vouch for some of the ones that we've seen. I'm trying to do my best to support both Celsius, the various different bidders, in trying to get the best result for creditors. So that's really good. Okay, so that's the update on the bidding. So the key dates are the 17th, which has already passed. The 18th was the hearing. And on the 28th, hopefully we get the disclosure statement. But if we don't get the disclosure statement on 28th, it means that we're probably going to get more improved terms or a different bidder. And if it's a different bidder, that will then have to go through a regulatory process. And so you'd expect that to cause probably a month of delay switching the bidder. So obviously switching is whoever comes up, they'd have to do a pretty significant improvement in order for everyone to go through that process. So that's what we're seeing there. What else right now? So then we just went through a bunch of fee stuff, which was really boring. I don't want to go through any of that. But they wanted to appoint an advisor, and the fee examiner went through all the different things. A couple of points which I think are just worth noting. The first is that there was a valuation advisor that they were looking to appoint. So obviously that would be valuing all the different assets, because the structure that's being proposed, all of the assets would go into a new co. We become shareholders, and then the initial valuation of those assets would be based upon an independent valuation, and then there would be quarterly public reporting based upon the performance of those assets. And so they wanted to appoint a valuation advisor to get a professional, an independent valuation of those assets. And also there was a bit of, the judge was saying that there was a bit of a cock-up, obviously, between Kirkland, who were representing both Voyager and Celsius. And in the Celsius case, the claim that Celsius has upon Voyager wasn't submitted in time. And the fee examiner is questioning that based upon some of the work of creditors. So, the work that people like Cam Cruz and, Daniel Fishberg and Manny and everyone, they did say that although you may not be getting progress in your motion, it sets the tone for what to focus on next. And so everyone pointing out these things is supporting us in getting, the best results possible, focusing on what's important to focus on. And so the fee examiner was questioning whether Kirkland and Ellis can take a hit on some of their fees as a result of that mistake. And then that's going to be disputed when they put through their next thing. So then there was this really weird scenario where all of the different professionals at our expense were all congratulating each other on an amazing job done. And the fee examiner were there and the judge was going through, and it was just like this round circle that felt like it went on for far too long, where everyone was like, congratulations on a good job. And I was thinking, how much are we paying for this congratulatory ceremony? But anyway, so those were the points on the fee examiner stuff. If you want to get more details, go through the tweet stuff. I'm going to go through. Let me just go through the next one. Then we went into the withhold ad hoc. Okay, so the withhold ad hoc, for those not familiar, it's Deb was representing the withhold group. It's no big deal. It's like $14 million of the estate. And they were just going through a settlement agreement. If you're in withhold, you're getting 15% if you settle, plus the rest of your claim. So you're getting 15% on top of earn, basically. And so, that's a bit of a weird situation. Custody was created because state regulators said you're offering illegal securities. And then withhold was created because they said, I know you put them in custody, but you're not authorized in order to offer custody services. So they created this withhold, which was originally intended for coins that may be securities, like XRP and BNB token. And so the withhold group, they're getting 15% on top, and you will get a settlement agreement. If I heard it correctly, they said they just want to settle because the litigation would cost more to the estate. They estimated at 1.3 million of the 14 million is the 15%. And so taking it and litigating it further would probably cost more, uncertain outcome, delay everything. And so they decided, I think, and they did say that the individual members of the ad hoc group are going to get the settlement. And then as part of approving a plan, everybody else will be able to opt into that settlement that's not actually paying the legal fees of the withhold group. So that's the withhold settlement as well. That was the next section. That was approved. And there wasn't any objections either. Let's see what they covered next. Then I think we went into the most important part, which was the class claim. Let me just read my notes. Yeah, the class claim was really, White and Case, representing the Unsecured Creditors Committee, really gave the case about the importance of some of the fundamental things that everybody agrees with the exception of those which are most likely being paid by Alex Mashinsky, or they've got some side agreement to repair his reputation. But those that are on the side of creditors, they all agree that Alex Mashinsky lied to them, and the lies lead to fraud, and therefore every single creditor having to file a claim for fraud is a hugely inefficient process. And probably of the 600,000 creditors, last time only 22,000 bothered to do that. And so you'd end up with a situation where a small minority compared to the general creditor base would end up with, using the examiner report in order to file a class claim against the fraud of Mashinsky and previous management. And you'd end up with only a few people doing that, and then they may be entitled to the assets, and it would be a deeply unfair process. And so Milbank, representing a group of Series B preference shareholders, were arguing that this is unprecedented, it can't be done. And Judge Glenn was really pushing back and getting pretty aggressive on the process. And he eventually approved it, which means, just so you're aware, that the Unsecured Creditors Committee can now file a fraud and misrepresentation claim. And White and Case gave, all the things we know about Alex Mashinsky lying all the time, and that leading to this situation where the UK regulators, he said, that Rebecca, one of the creditors, was listening to AMA's live, and then various other team members within Celsius said, we've got to edit Mashinsky's lies out. If you've watched some of Cam Crew's Slack videos, he's been releasing a lot of the information that you may not have seen in the examiner report because it was like 600 pages, and linking directly to Slack conversations where, Mashinsky was on the AMA lying to people and lying to creditors at the same time as Slack conversations where, people in the team were like, this is crazy, I can't believe. So check out some of those videos. And there was lots of links to direct Slack channels. So Cam Cruz has been putting together a bunch of videos so that people are aware of some of the things that they may have missed because they didn't have time. Now, the examiner report really makes the foundation of the class action fraud claim. And there are a couple of, Judge pointed out that there's a couple of interest groups that may not necessarily want that to happen. So if people are kind of disputing the examiner report, it's going to work against creditors' interests. And so anybody doing that clearly has an alternative agenda, as we're experiencing throughout this, because that's really the linchpin of the case that allows for a class action fraud case to be submitted. And obviously the only person that really cares about that not happening, because the equity shareholders, believe that there was fraud. Celsius, even, Kirkland and Ellis joined, the fight in saying this is an efficient process given what happened. And the UCC and White and Case also did that. So if anybody is trying to defend Alex Mashinsky and disprove the examiner report, clearly they're working on an alternative agenda to support Alex Mashinsky's comeback and reputation, given that he's now set up an ad hoc group. And that ad hoc group is representing, trying to get, basically disprove the examiner report, blame everything on FTX, so that Mashinsky can get a massive, a chunk of the sell token, which in the plan was subordinated. And also, if you can disprove that, then equity shareholders, you can't prove the fraud between the substantive consolidation and intercompany. Those will be trialed separately. But, it really is just clear what the path forward is. And the judge knew that, so the judge approved that motion, which means, here's the good news. If you don't want to file additional non-contract claims, and I know this is jargon, so you have contract claims, which is you requesting your coins back, and you have non-contract claims because the way that it was structured is a bunch of the assets were given to another entity. Alex Mashinsky is a 54% shareholder of that entity, and they won in court that they are entitled to those assets, and therefore we only have non-contract claims, which means if Mashinsky committed fraud and if Mashinsky misrepresented, as outlined in the examiner report, then we can use that in order to litigate what is a document. And so Milbank, representing the Series B, was saying that this is a deeply inefficient process, but we ended up the judge saying that this process can go through, where the UCC can file the non-contract claims so that you don't, unless you want to, have to submit a bunch of additional forms, and Kirkland Ellis don't have to go through all those forms. And so in theory, if this is approved on the 28th of April, when you have to file the bar date, which is when all claims are finalized, you, in theory, don't, if you agree with the number of coins, which is your contract claim against the LLC entity, then if that's correct, you don't have to file a form, not legal advice. And the UCC will then make the non-contract claims against all other entities based upon information in their complaint and the examiner report for fraud and misrepresentation for you, which may end up being needed in order to gain the assets. So you've got coins and then you've got assets. Remember, our money, Mashinsky used our coins in order to take out collateralized loans to buy assets, and the shareholders have title over those assets, but there was an intercompany loan which needed to be settled. And so the UCC wanted to resolve the intercompany loan, the fraud, and everything in one go, and they wanted to file a class claim, and that was approved by the judge. There was a bit of legal terminology that I didn't really fully understand, so if anyone wants to come up and clarify a bit more about this point on certification. I was multitasking and writing at the same time, and I didn't quite get what that certification thing meant. So maybe, I don't know if David Adler's in the audience or anyone wants to come up and give a bit more clarity on that. But that's a really, really good, that should really help, because 600,000 people filing those claims, you can imagine only a few fraction of those would do that. And then they might get it wrong. And the UCC are probably more positioned in order to do that for us. But if you want to do additional claims on top of that, you might want to seek legal counsel on that side. Okay, so that was approved. And then I think there was just a bunch of, interestingly, the US trustee was really pushing back on the class claim. Which really seemed out of character in terms of creditors' interests. And I'm wondering what kind of games are being played there. White and Case was surprised by it. Celsius was surprised by it. Kirkland Ellis was surprised by it. So we need to be aware of some of the different interest groups that may be going on there. What else have we got? Just going through some more tweets. It was going through, so they obviously wanted to set a time frame for investigating the intercompany loan. UCC had set a structure for that, and that's most of the stuff. Okay, so I think that's really the main points. If I've forgotten anything and anyone puts a request, they can come up and share anything that I didn't cover or any questions that they've covered. So put your hands up now, and Azad will be letting you in shortly. I'll just go through some of the different things. So just give you a quick summary. So court hearing updates we've already done. Bid updates I've already covered.
Simon,
there's 4 different.
I just wanted to.
Sorry, guys. Let Simon finish off first, and
I won't be long.
We're going
to pick. We can bring them up.
Yeah, we'll bring up the speakers in first order, with Michael being the first person to speak, as he's been waiting long.
Okay, great. Bid updates I gave. There's 4 people in that. 28th, we will get the disclosure statement, or we'll get an extension because there's better bids. Custody and withhold settlements, those are completely underway and has now been approved. The class claim, we covered some of that. And there are 2 new ad hoc groups, one that's already introduced himself on the court. So some of the top creditors have decided to partner with Manny and others in order to formalize and fund the EARN ad hoc group. So look forward to seeing, this different interest. And just to give you a bit of where this is going, we've got the final battles, because the business plan of what EARN end up with is based upon a negotiation with the borrower group. The borrower group, it was released that, they've renegotiated terms. We haven't got a full understanding of those yet. Hopefully those hit the docket soon. But they've really, the EARN ad hoc haven't had their representation. So expect a bit of friction and tug of war between EARN holders and borrowers based upon those renegotiations. And that was, I think, one of the purposes of the EARN ad hoc, because under the new negotiations, it was kind of hinted in the last term sheet that borrowers can get a full recovery. And just like custody and EARN were played off against each other, expect to see some of the creditor wars that can happen there. I think that's going to happen, but hopefully we can all be adults, get through this and celebrate on the other side of that. But that's coming up. And then we've got the bombshell, as I said, which is Cell ad hoc. I believe have been done a massive disservice in that now Alex Mashinsky is representing them and paying for legal counsel. And so Alex is obviously going to be using that as an opportunity to disprove the examiner report, continue under oath to say that I did nothing wrong, it wasn't me. And so that he can then not have his Cell claim subordinated, and also try and not get, maybe the recovery can happen and then shareholders get their position as well. So I continue to be amazed at the sociopathic, narcissistic behavior of somebody that's done so much harm, but I don't know why I am surprised. But we're going to see a lot more of that, and we'll see him in court defending the Cell token group, and he's obviously hired counsel in order to do that. But on the plus side, we might get the opportunity to put Alex Mashinsky further under oath. And then once we get out of Chapter 11, remember, a part of our recovery is the litigation trust and the claims against Alex Mashinsky and other insiders, not just for the clawback exposure, but for many of the additional things. And really, it's become the linchpin of the case between shareholders and creditors. So those are really some of the things that are coming up. So now let's take the questions. Thanks, Azad.
Okay, let's bring up Michael. Then it will be Velko next. So Michael, you're first.
Hello, Simon. Can you hear me?
Yeah, got you, Michael. Sorry I was so long.
Oh, it's all right. You always have really great information. I really enjoy hearing this. And thank you for all you do for all of us. But into my question, I know this is not something that was discussed on the first court hearing, but I've been wanting to know this for a while. I've had the opportunity to call in and ask you. With the Nova Wolf plan, the ETH was considered an illiquid asset. But now, since ETH can be unlocked, why wouldn't that be considered, I guess, the liquid asset that would be distributed to creditors?
Yeah, the reason is because the borrower settlement. So the part of the business plan is to take the loans and put them under the equity structure, of which all EARN holders would become shareholders. And so they need collateral to back those loans. And Nova Wolf are doing a AMA, I think, this week, in a couple of days. And so the initial was calling them illiquid assets, i.e. staked ETH. Celsius have started to try and unstake some of those ETH. So I think they're going to change the term illiquid assets, because it's not really anything to do with the liquid assets, because we know that they can become liquid, and state that this is just really what they want as collateral. And there's going to be an interesting mechanism for equity holders benefiting from a trade between Bitcoin and ETH and the incoming stakes, versus what the borrowers actually want to do. So I would not expect. So there's about, approximately $1 billion of collateral for those loans. And those would be transferred over to the NUCO. We would be shareholders, and then they would utilize those assets in order to do something. And you'll understand the risk profile in the disclosure statement. Obviously, the friction of that is that they would be charging a fee for performance. And if those assets go up, they get a fee, and then we would also get a cut of that fee. But you'll be able to understand a lot more about it. But yeah, if you want more assets up front, then that would be a competing plan, which would be a controlled Chapter 11 liquidation, which would be along the lines of the second bid that I gave when I was involved in the process. But just because they go from illiquid to liquid, I don't think that's going to change their plan that they want to use some of them as collateral. It may mean that the further the price goes up, the less they will need to take as collateral. That's an interesting scenario, but there's going to be a very aggressive model and assumptions in the disclosure statement that will help us understand that, and we'll try and deconstruct that together.
Okay, thank you for that question. Next speaker is Velko.
Hi, everybody. Hope you can hear me well.
I can hear well.
Yeah. Okay, fantastic. So I have two questions, if I may. First is our fraud and misrepresentation claims. From just listening to Simon and following the development of things, I kind of deducted that we'll probably be receiving our claims sometime by the end of the year, when the process of Chapter 11 will be finished. So what do you think about our claims for fraud and misrepresentation? Is this something that's going to take years of litigation to resolve, or is this something that we also expect to be resolved in the same time as our regular coin claims? And connected with this fraud and misrepresentation, will our damages, are damages there connected with the claims of the coins that we have inside Celsius? Or is this just going to be something where we're going to sue and just, throw a number out there and then hope we get this number and then divide it between creditors? So that's one question. And another one, which...
Let me cover that, because I'll forget.
Yeah, fantastic.
And then we'll do a second question. Okay, so there's two parts. Again, not legal advice, not financial advice, but there's two parts to the fraud and misrepresentation. The first is an important part of the claim in the case between who gets the value. Is it shareholders or creditors? And that will be resolved in court. But if you disprove fraud and misrepresentation, then that can't be used as an argument in order to settle that dispute between shareholders and creditors, as it were. So the first part is ensuring that the assets where creditors' coins were used to make investments and used as collateral, it is utilized within Chapter 11 in the shareholder versus creditor dispute, and to allow not, so UCC files that form, which is the 28th of April deadline, and they hopefully can do fraud and misrepresentation for you. And that was what was approved today, and I'm sure there'll be objections by competing interests. So that's the first part. Now, obviously, Alex Mashinsky and the ad hoc that he's representing wants to try and drain the estate of as much as possible, because he needs to pay for the legal fees for his defense on what comes next in the litigation trust. And the litigation trust is where you can do all the things like come after Alex Mashinsky and other insiders for money that they withdrew or various other things. You could also come after FTX and SBF, because Alex Mashinsky, SBF, FTX, and Celsius, committed a lot of this, what is probably going to be proven as fraud together. And then they obviously turned on each other, and then that's when it led to a lot of the, trying to destroy each other's businesses. Mashinsky's going to want to fight that tooth and nail. One, to save his reputation, and secondly, probably because all of his money is going to go on defending himself for the next 5 years. And so the litigation trust is going to be a long-ass process. And so we're going to be asked to fund that litigation trust. Last time I looked, I think they're arguing about, 40, 50, 60 million that they're going to be putting into the litigation trust. And then you'd expect Alex Mashinsky and other insiders to fight that tooth and nail, to try and, drain the estate further so that he's got the funds to defend himself. So there's two tiers to that process. Does that answer your question? That the second one should go on for a long time.
All right. Yeah. Okay. And this is just not really a question for you, but just for everybody who's been doing such a fantastic job in going through all the papers and trying to understand this mess. if somebody could kind of venture to give us a ballpark number of what would be the best crypto value in the market for us to get the best return. Is it that the crypto coin falls down to the number that we had at petition date, or is it even better if it tumbles even lower, or if it's a good number between 30 or 40 or 50K, where other assets that depend on crypto strength gain value, and then this results in us getting a bigger return. Because at the moment I see on Twitter and everywhere, everybody's kind of guessing, bear market, bull market, BTC should go to 100, or some are saying, it's best if it goes to 6,000 or whatever. So if somebody out there can just kind of try and get a range for us to know what would be the best coin value. That would be fun.
Maybe we'll have enough information in the disclosure statement to make those calculations. It's a very complex calculation to make. The reason for that, from my perspective, basic, what do we want from here? We want the bull market worked in our favor because it drew in reputable syndicates of bidders. And they weren't there in the bear market because everyone was very fearful. The miners were in real distress. But now the bull market worked in our favor in that sense. But at the same time, it creates this scenario whereby Celsius could elect to make everyone whole. The more the value of those crypto assets go up and the longer they can draw out the process. And then shareholders also have their play. And so from here, from a creditor perspective, get through the bidding process and hope that the market goes sideways or down from here. The further up it goes from here, I think the worse it gets in terms of shenanigans that can be played. That's my perspective. Now, in terms of specific numbers, we need the disclosure statement because the amount that Earn are actually going to get is dependent upon several factors. How many people in custody settle, what happens with the sell ad hoc. Remember, if Mashinsky ends up with a bunch of his sell, that dilutes to the value of all of that sell on the platform and all the different entities. So you've got to kind of do the calculations. Well, some people in the Cell 81 might say, okay, so we get a higher price, but then the value of the estate is diluted by potentially all of the equity, getting the assets, plus all of the additional value that Alex Mashinsky would get if he got his way. And so you've got to kind of do the calculations. And then there's how many people renegotiate loans from the borrower groups. Do we have a convenience class? Remember, that's going to have to be renegotiated because the 70% as the price of Bitcoin goes up probably becomes something you don't want to do. You probably want to reduce that to 50% because 50% based upon where the market was at that stage is so that there's lots of competing different areas of the plan. And then obviously mining, the higher the value of your Bitcoin you can get before a difficulty rate adjustment means that you can pay off more of your bills in dollar value. All of this is going to have to be modeled out in the disclosure statement. And that's what they've been working hard on and we should be getting in the end. So unfortunately, I have to give you the cop-out answer. But if you just want a simple answer, the bull market has already achieved the good that it can achieve. And now I think you don't want the market to go up from here for the rest of the Chapter 11 case, kind of stay around here or go down, because the further you get along, the higher the risk of shenanigans in games and the dollar value of the whole, going in being able to use those assets in order to fill people's hole in dollar value.
Okay, next speaker is Bitcoin Knight. Oh, sorry, Crypto Knight, sorry. Crypto Knight, are you there? If not, we'll move over to Crypto YOLO. Okay.
Hi.
Crypto YOLO, it is.
All right. Well, I didn't have a question, but I did want to kind of correct some of what you said, Simon.
Yeah, go for it.
So the April 28th, don't worry about it. because part of this whole class claim thing was that the April 28th date is going to be tolled, which basically means it's going to be suspended until a decision is made on the certification of the class. And the certification of the class basically says that, hey, there really is a class that can file together, and be commonly represented. So that's what the whole class certification process is. The U.S. trustee wasn't objecting to a class claim. They were objecting to the UCC being the party that filed the class claim, which I was actually surprised that Glenn allowed. But I mean, I think fundamentally he sees that it's a problem here that creditors aren't represented, and Kirtland was going to pick on the three bellwether creditors who are acting pro se, and quote, he wanted a fair fight, and so he clearly wants them represented, and so approving a class claim was one way to do that. It didn't have to be the UCC, but he went along with it because for whatever reason. But I do think that actually may open this particular ruling up to appeal, because I think it's fairly novel for the UCC to be allowed to file a class claim. I could be wrong here as well.
Okay,
And then,
question on that. So do you think that potentially leads to just some other council that's independent of the UCC doing the class claim?
yes, yeah. I thought Ignat Tuganov's motion made sense, and I think that's where the U.S. trustee was coming from. And then, of course, it does lead to a new law firm being able to earn fees and all this. And the one thing that's in favor of the UCC/Wyden case pursuing this is that they have additional facts above and beyond the examiner's report from their own investigation that's been going on in parallel that could aid in the filing of the class claim. And then the other thing is about Alex, and certainly I'm not going to defend any of Alex's actions, including funding the Cell 81 ad hoc. But this whole fight with the preferred does not involve Alex, right? So if you think about the bankruptcy waterfall, you have creditors, including us unsecured creditors. And then behind that, you have equity. And then equity is tranched. And you know this, Simon, because you were involved in one of the tranches here, right? So there's the preferred Series B, there's the preferred Series A, and then there's common equity below both of the preferred Series B and preferred Series A. The preferred Series A, which is the Bank to the Future round, is below the preferred Series B. As far as I know, and correct me if I'm wrong here, at least on the Series A round, I don't believe Alex is a shareholder of Series A. And I'm pretty confident that he's not a shareholder of the Series B because it was basically only for institutional investors. So Alex is out of the money from all of us unsecured creditors, in my opinion, assuming we prevail in this whole, either the intercompany loan, the class claim, or substantive consolidation. Then if that doesn't work, he's still behind the preferred Series B and the preferred Series A before he'd ever get a penny through his common shareholdings.
Okay, cool. Yeah. And so there was a restructuring. So when we were in the series, when Bank to the Future, I can't comment about specific investors' investments, even if it's Alex. Obviously, I can't talk about that because we're under confidentiality with shareholders in the Series A. But I doubt that Alex would be reinvesting in his own company when he's already got 84% of Inc., which was public information. And then that had 64% after Series A and Series B of Limited. But yeah, there was a restructuring when we originally invested in the UK company. And then the Series B obviously happened later. And they invested into the UK company. And then there was so it would be interesting to see on the but I think you've got the structure there, right? That there's B, then A, then ordinary. And I hope that what you say is the case, and that's where it goes.
Yeah, well, and even if the percentages are such that you're saying he has a certain percentage after conversion of the preferred, the issue is that the preferred are preferred. So they have to get paid off to at least their redemption value before they'd exercise the conversion rights, right? So the preferred B and A should sit, and I haven't read these docs, right, because I'm not an investor, but they should sit above the common and where Alex is, and so I think he's far removed from the money in that standpoint. And then whether or not he's able to, we don't know what the plan's going to be now, right? Because there's 4 people that could submit a plan, so we don't know what the final plan is. But it's pretty clear that the debtor Celsius is pushing hard to make sure that the insider-owned cell, which is Alex and Nuke and Leon and everybody, that be zeroed out, which I think everybody thinks is appropriate. And so, I think that's going to be a hard argument for the insiders to win on any grounds. I mean, I can't see Judge Glenn granting that argument on any kind of moral or fairness grounds.
Awesome. Thanks a lot, Yolo, for clarifying those points.
Okay, thank you, Yolo. I've got a question that's been DM'd to me, so I'll just read it out. This person would wish to remain anonymous. Hi, Izzard. Can you please summarize for those of us that need this boiled down to understand? I'm an earn client. I've got 1.2 Bitcoin. I will not file a separate claim. I have terminal cancer and wanted this asset to help grow support for my 2 kids, one with mental disability. What do we hope to get back and when? And will we get back Bitcoin if we hold Bitcoin? And do we expect to lose most of our value?
Okay, yeah. So the answer to that is that at the moment, our best guess is that you may get 30% of your Bitcoin back upon approval of a plan, and then you end up with some equity in a company that may take several years to mature and pay out dividends if the Nova Wolf plan is accepted. And those terms could update. And so really, in trying to put it in simple forms, we don't know the answer yet. But we imagine that if this goes through, you will get a percentage of your Bitcoin back as an initial distribution. And then you'd end up with some shares in a company that will pay quarterly dividends. Or you'd end up with shares in a company, or, I can't speak to all the different plans, that, you may not see much money for a long time. It may take up to 2 to 3 to 4 to 5 years as a private equity investment. But if that succeeds, you may end up with many multiples over what you originally did. Now, whether that recovers you in Bitcoin terms, it depends upon whether the equity outperforms Bitcoin, and there's several unknowns there. So in its simplest term, you'd get an initial distribution of your Bitcoin back if everything goes to plan. Some plans will give you more Bitcoin, others will give you less. And then you'd end up with shares in a company that hopefully, if it succeeds, will either make you whole, or it will pay you a multiple, or it will end up with less of whatever's remaining. Or on this extreme circumstance, nothing. And that all depends on the plan. But yeah, the initial part is what you can bank on. I think you should prepare for not receiving any of that money until at least the end of this year. Hopefully it could come sooner, but that's what I think you should be planning for. And given what a critical, how critical these funds are to your personal circumstance, and firstly, I'm very sad to hear your circumstance and that you ended up with these funds being locked up. It's been crazy hearing all these different stories over the last 9 months. But I think plan for approximately 30% in dollar terms, but paid out in Bitcoin. And unfortunately, we can't give you much more than that. Hopefully, when a disclosure statement comes out and we know who's won the bid, we can give you much better answers. Hopefully, that will be next month.
Okay, next speaker is Natty.
Yes, I'm here. Okay, thank you, Simon, for doing this again. So the proof of class of claim has been approved, and you think not legal advice that it absolves the creditor to file an individual claim. Let's follow that. Yes, Crypto YOLO is right. I think it's interesting what he said about the priority scheme regarding the shareholders. So the B shareholders came first, then the A series come after them, and then the common stock, which is the B ordinary shares. Let's remind us that this is a UK company. But in terms of proportion, still Mashinsky is the majority shareholder. So even if the B shareholder and the A series get paid first, in the eventuality that they get paid anyway, their claim is validated. Fighting for the B ordinary shares is in his interest as for the preferred share. So the reflection, the reasoning that his interest is aligned with fighting for the shareholders is still valid. And same for the sell token holder. He withdrew everything besides sell token, so this is his interest. That's it. One subject I wanted to speak about, and maybe you can rebound on, is the control liquidation. So as per my research, the Chapter 11 control liquidation is still, if the Nova Wolf plan is a reorg plan, so this is the first side of the Chapter 11. The debtor company Celsius try to reorganize. They cannot under their own name, so they take a sponsor who has the proper broker license with the SEC. That's what they are trying to do, offering equity token, which is a quote, or a check quote, common equity, but not a real common equity, as the ETS equity token. And on the other side, we have now 3 bidders, undisclosed name, and some, as per the information which is not official yet, are planning some Chapter 11 control liquidation. So as per my research,
just to get that one clear, one or two of those bidders, so there are only 4 people in the game right now, and so there's no additional controlled liquidation. One of those, a controlled liquidation is actually a plan. So one of those people or more would be submitting a plan for a controlled liquidation.
All right. So my point is that
Celsius can't execute the controlled liquidation. They still need a sponsor to execute it.
Yeah.
Because if Celsius executes, it's Chapter 7.
No, they are Chapter 7 is totally out of charge, so they have no control, and that was my point. Chapter 11 control liquidation, is it under the control of the debtor or not?
No, you still need a sponsor. So if you want Celsius to do it, this is my understanding, then it's going to be a Chapter 7. It will be a US trustee takeover and a Chapter 7. If you find a sponsor, they can either implement a reorg plan with sufficient licenses and a plan that gets approved, or a sponsor could execute a controlled Chapter 11 liquidation. And so if you look at the 2 bids that Bank to the Future submitted, the first was a reorg plan, which is where we were going to give everyone a rights issue and they could reinvest into the mining operation and the fund in GK8. We then pivoted that to a controlled Chapter 11 liquidation, which is you just use our platform to receive all your coins in custody and all of your assets. You get some equity, and those those are just held for you over time through a sponsor that has sufficient licenses and regulations to do that. And those companies, it could end up going public, and that would be a controlled Chapter 11 liquidation versus a reorg, which is where you kind of get a forced investment, and an amount, goes over into the forced investment pool, and it's a more aggressive plan to try and use some of the money in order to drive a greater recovery.
Great summary. Excellent. That's what I wanted to hear. And do you believe in the alternative plan you have tried to submit, which we are waiting for this control Chapter 11 liquidation, that we will see common equity in this plan rather than equity token?
Yeah, so one of the things that I think will be competing in terms of which plan is accepted is the type of equity and how that equity is represented. It could be represented as private equity. It could be private equity that's highly likely to go public on a stock market, or it could be a security token. And that's one of the factors in terms of feasibility and evaluating the likelihood of a recovery that will be involved in selecting, I think, the sponsor.
Okay, let's bring up Dragon. You're next.
Hey, how you doing, Simon?
I'm good, Dragon.
I've been trying to, since the ruling, some of it says is fraud and stuff. I've been trying to track down everybody's assets, no matter which one. And I noticed there's a lot of intercompany loans, and like with FTX, they actually had intercompany loans to Council, and they also have it between companies, like to BlockFi, to Celsius to Voyager, to FTX, so on and so forth.
Yeah, just to be clear, that's not an intercompany loan. That's a loan to an external company. Intercompany means you've got a group of companies, and they're effectively one company, which I believe there's a very good case that's the case with Celsius, because we knew that they all use the same wallets and they commingled all the different funds, operational funds, custody, and earn. And then you've got something set up a bit more professionally, say like Digital Currency Group, where you have separate entities. One's called, Genesis, and another's called Grayscale, and they all have their own boards, and they all have their own Fireblocks accounts, and they all have their own Slack accounts, and they're not really treated as one company. So those are like the two different, and this comes down to the I always get that word wrong, substantive consolidation argument, which will probably be litigated. Anyway, so, carry on the loan side. I just wanted to correct that.
Yeah, so I'm trying to find the assets, right? So at first, I searched through all the filings for Celsius and others to see if there's any of the original loan agreements. And during the bankruptcy and like during the whole process for all of it, to see if there's any of the loan agreements. You said you didn't see any. I was wondering.
Yeah, you need to be in the data room and be a bidder to get access to all of the different loans and different assets.
Is there any like unsealed ones? Because I'm trying to, if that can be found on any like the bankruptcy sites or anything. Because
no, I don't think it. I haven't seen a court docket that release all the details of all those assets.
Yeah, because those loans actually would help kind of point the direction of where some assets are hidden. Like with FTX, they were able to find like $5 billion. So I'm just trying to see if there's any that I can access the loan documents from either intercompany or between other companies. Then I can figure it out at minimum. Try to help.
Yeah, from my perspective, most assets are known, and those in the data room would understand those assets, and everyone involved in the bidding process would be looking at those, plus the litigation trust if they want to pursue any claims based upon those assets. But unfortunately, at this stage, I don't think creditors have been privy to all of that information. But I don't expect anything major to change from our existing understanding of the financial position of the company, with the exception of the intercompany loan, which is going to go through a litigation process. And the intercompany loan is not going to find you more money. It's just going to be utilized in evaluating, what value of assets are shareholders in the money or creditors get to keep them, and it will all become part of that litigation, which the UCC and Celsius want to do in one go, and the equity holders want to drag out and do bit by bit.
Okay, next speaker is Sweetman. Can you hear us?
Oh yeah, good evening, Simon. Good evening, all. How y'all doing? I just got a question about the stuff that was approved today for the filing of the group claim.
Yeah.
Okay, no, sorry. That's my second question. My first question is that my loan is going to be expiring on the 27th of this month. I've paid off my interest. Just what is left is the collateral that they're holding, my Ethereums that they are holding. Am I in the risk of losing my collateral at this point, because there's no way I can pay off the money that I borrowed to get my collateral back?
So the answer is we don't exactly know right now. What we do know is that there is a borrower settlement agreement that's due to hit the dockets at some point. And so you all know that they originally gave two different options. One is just that you net off the collateral from the loan. The second is that you renegotiate the loan. And so those will be understood. And then I'm not sure exactly what would happen if your loan hit expiry. I think it would come to some kind of renegotiation, or you decide to take one of those two options. But you will know that as soon as the borrower settlement agreement hits the docket, and you get to vote on that, and it will be contingent upon the plan being approved. So unfortunately, you don't have the answer yet, but you will have kind of those options, and we'll see where it goes. If Celsius Loans is here, he might be able to give you a better answer as well. Don't know if he's got his hands up.
We've got Manny Main with his hands up. Hey, Manny.
Hello.
Hey.
So sorry I don't have much time today, but I wanted to stop in and tell everyone about the new Earn ad hoc. So I know that this came up in the call already, but we launched an official ad hoc. We've got some top 50 support. We've actually gotten a number of requests to join the committee, and we're backlogged processing them and processing contributions, which is great news. You can find out more about the ad hoc in the Earn Telegram, which many of you are in. Also,
can you pin it to the top, Manny, when you get a chance?
Yep, I can do that. And then also, you can email, you can go to earncommittee.org or email info@earncommittee.org. If you go to earncommittee.org, there's a GoFundMe there. I've been bad about not tweeting, and I'm not in front of my computer, but it's there. And I just wanted to say in court today, all the lawyers. So, one, I just want people to know, we're more like the loans ad hoc, right? We want to negotiate. We want a good deal. We want to get out of Chapter 11. Ideally, we don't want to be litigating, right? It's going to keep us more months in Chapter 11. Obviously, we want a fair deal. I don't need to restate some of the things Simon already said about, the higher the crypto prices go, the tenser things get, right? A deal that seemed okay a month ago doesn't seem okay anymore. This kind of nonsense, right? So, hopefully creditors can stick together, come up with something fair, get out of this, stand united against the preferred shareholders, right? Because, the higher prices go, the greedier they're going to get, and the greedier the Alex Mashinskys of the world are going to get. I also just wanted to say, in court today, Joyce, our lawyer, who's really great, from Offutt Kerman, and Joyce Coons, and also Jason Nagy, who's a seasoned fintech lawyer. They were there. They thought the hearing went really well. The judge's ruling actually surprised people. So our first call, actually, in terms of legal calls, was to David Adler, and so we talked to him last night about areas of common interest and such. But all the lawyers on the call thought that the U.S. trustee had killed the class claims, and that at best we were going to get some kind of independent fiduciary. People were pleasantly surprised with the judge today. I agree with what Crypto YOLO said, that it may yet come to pass that there is an independent fiduciary down the road. The judge kind of kicked the can down the road on that. And then also, I just wanted to say, and people can respond or they don't have to respond, but Judge Glenn was pretty glowing about Proces today, and I requested a transcript of it to prove it's true, and I'll share it because people are always and it doesn't matter. We have a committee now, so you're going to see a lot less pro se stuff. But actually, he was cribbing off of pro se filings when he grilled the preferred today. Filings that we got in at the 11th hour just before we launched the ad hoc. And he used a number of our arguments to basically badger the preferred equity. It was kind of amazing. He didn't let any lawyers talk except the preferred and the UCC. Like, he didn't let our lawyer talk. He didn't let any pro se's talk. He tightly controlled that hearing. But the judge was like clearly on all of our side. And it was really great to see that. And like, I'm really looking forward to seeing what we can do with actual legal counsel. And like, the one thing I do know is that to actually negotiate a plan, you definitely need legal counsel for that, right? Like, to be able to actually seriously negotiate on behalf of a group. So I'm glad we have representation. Again, earncommittee.org. I'll post the links. And yeah, please donate, join, etc.
Awesome. Thanks, Manny. And yeah, it's great, the ad hocs. One quick question I got, maybe you don't know the answer yet, it's too early. Obviously, have you got any ideas on how to separate the genuine victims of Cell Token versus the Mashinskys that are predatory using it for other agendas? And are they included in the Cell ad hoc, or do you think now there is, because obviously there's going to be a Cell ad hoc with Mashinsky, and then there's going to be an Earn ad hoc. Do you think, I got a lot of messages, from the genuine victims of Cell Token, and obviously the others were kind of seem to have an alternative agenda to repair Mashinsky's reputation. How do you get that? Have you got any ideas on that separation?
I really don't, honestly. I mean, like, I guess I'll keep an open mind about the recovery that honest Cell Token people get. Like many depositors, I would rather return everything in kind, which some of the Cell people want. I wish Ronan were here so we could joke about it a little, but it's actually a very serious matter, right? Because of the ad hoc. Like, it'll make for a good documentary. It'll make for Twitter court in court, which is kind of a joke and horrible. It sounds like you were saying there's going to be depositions of Mashinsky. I mean, I do think that, like, genuine victims should get some recovery. I cannot think of any strategy, though, Simon, and maybe others can think of a strategy to stop those people, like, to keep them off of sort of Alex Mashinsky's committee. It's like, there's nothing that we're ever going to fight for that's going to be more than Alex Mashinsky is going to fight for Cell, right? Like, that's just, so, like, I don't know, people could join ours for, like, moral reasons or something, but, like, if, like, your goal is to maximize the recovery of Cell at all costs, like, I don't see how the Earn Committee can be, like, that's not really what we do, right, Simon? Like, I don't know.
Yeah. I mean, I think Alex getting his Cell Token and objecting to the subordination, I think that would be a net negative versus, like, the dilution to the estate.
Yeah,
I think
totally.
Would be a net negative versus getting 20 cents or 81. So
yeah,
that's going to become, someone should do the maths.
Someone should. And also, Cell Tokens, people should keep in mind, if they have some Cell Token or a position in Cell Token, you may get a lot less for your other crypto if you start becoming a Cell Maxi, right? That's another thing, right? It's going to just hurt the estate. So unless you're like somebody who withdrew
selling kind,
frankly,
I can tell you right now, Manny, selling kind will cause the same regulatory issues and objections that
of course,
we're just gone through.
I know we can't. Yeah, I know. It's terrible. But yeah, I think the 21 cents is basically our position. Sorry. But, like, I will say, I think we could look at that if Cell people seriously contact us, but, like, it's just kind of not what we're about. Like, we're not really, our goal isn't to, like, sort of do that sub issue, I guess. That's at least.
Yeah. So it's good the different ad hocs get to go, because there will be clear maths of if Mashinsky wins, the dilution and the drain to the estate, and the knock-on effects that can have on equity as well. There will be some mathematical models that can be figured out of how to maximize your interest.
Yeah, no, we should definitely do the math to educate people. I guess the last thing I was going to say is, yeah, if your position is you withdrew everything and you have cell token left, I hope you won't, for moral reasons, join with Alex Mashinsky. But, like, obviously, I'm not going to be able to offer something to those people that, you know, right? Like, but I think people who have a mixed portfolio, and in general, I think anyone, I mean, I think it's morally I will say, I think it's morally everybody should advocate for their interests, but I do think maybe you're a morally reprehensible person if you do it, if you advocate for your interests by joining with a criminal to do so. And if you don't believe he's a criminal at this stage in the case, you can state your opinion. As Simon said, it's not helpful to creditors. It's not helpful to getting out of Chapter 11 or the case. I'm not here to debate people or argue with people about it. But, like, am I willing to say that you're joining with a criminal? And I don't think you're as a person morally reprehensible, but perhaps the action is, or it's unethical. I think those would be fair things to say, but I'm not going to be able to stop anyone. But, like, I'm not anti-cell. I'm not saying give them zero. Like, I think people were genuine victims. I think there's lots of genuine victims. People were misled. Like, I agree with all of that. And you have this tie to Mashinsky and all the toxicity, which is now exacerbated. I don't know what else to say, Simon.
Yeah, all good points. I just wanted to put the conversation out there so everyone's aware, because the ad hocs are there now. Obviously, we don't actually know yet, but I did release the information when I had it, and everyone called me FUD, or a bunch of people called me FUD, and then they were like, holy shit, Zach confirmed it. And it looks like, you know, some of the partners, if you look at the tweets of certain people, you can see that they claim that they're uncorruptible, and they claim that they've just always been on the side of creditors, but you can clearly see a clear agenda that has always been changing. And now it becomes really, really clear of who's for creditors and who's against creditors. So do your own research.
All good points, Simon. Well, yeah. Okay. I mean, yeah. So I hope that that's definitely going to be an unfortunate distraction in the case. I was going to ask, it wasn't like a late April Fool's. It's really happening. It's almost like when I saw it, it's like Stranger Than Fiction, or just proves what a great documentary this is going to be. But it could be really horrible for our recovery and delay things longer and all of that. But it will make the documentary better. So I think we should fight really hard to get the intellectual property rights to all of that as part of the estate, and not let Mashinsky tell his own story when there's the criminal charges. We should make sure as restitution, he has to donate, sort of telling his story. I think I've heard of that happening before.
Okay, awesome. Thanks a lot, Manny. Yeah, we do know that Wiley pulled the book, The Mashinsky Method, and I'm sure the new Mashinsky method of how to give your coins to make the coins the property of Celsius, and so they can spend them in Chapter 11 and give your assets to shareholders, is, I don't think, something that he could have figured out himself, but certainly been guiding in that direction. And we will find out eventually why he kept his director position in the LTD, and what the meaning of him being the majority shareholder in the parent company means in the end. And I can't wait to see that.
Okay, we got a hard stop at 8:30.
Yep.
That will come to 2 hours exactly. So those who got your hands up, if you can put just one question, and we'll move over to the next speaker. So let's go with Dexter.
Hey, thank you. A lot of great questions today from the community. I had to rewrite mine at least 3 times because the communities keeps stealing my thunder. That gentleman with cancer and a special needs child is just heartbreaking. I think one thing the community is looking for is a timetable. They see a lot of extensions and court jargon that just seems to keep going on. So I don't know if somebody in the community can do a video or post something about the a timetable of when we expect to get out of Chapter 11. But that leads me to my question, Simon. Can you explain how the UCC and Celsius determines the winning bid? Because of that leak earlier this year, many of us believe that some of the other bids were actually better than the Nova Wolf bid. Specifically, your bid, and I think there was like two or three others that I really liked. How do they determine who's the winning bidder?
Yeah, difficult job. So they've got investment banks, and those investment banks design, they're meant to model what they think would produce the best recovery, which, to be fair, as somebody that's been investor in the private equity industry, I invested in Celsius in 2000. They became a $3 billion unicorn, but I couldn't model that they were fraudulent, and that equity would either become worthless, or it would become value based upon whatever happened in the Chapter 11 process. So it's impossible to actually model, but they will have a good attempt at modeling, because mining is something you can model. There are public companies in mining. Staking is something difficult but possible to model, and the renegotiations of the loans. And you can compare that with a Chapter 7 liquidation. And then you can compare that with, well, what if you did more of a controlled Chapter 11 liquidation? They did Kirkland made a commitment, and I've been really pushing that everyone will see the bids, but they won't see the bids until either a disclosure statement comes out, or a new bidder is selected, and that would lead to a different disclosure statement and an extended timeline. So really, I've been pushing, but unfortunately, you're not going to be, as creditors, going to be involved in that selection process. But the bids will be published, and you get to vote for the plan or not vote for the plan. And really, you're delegating to Celsius. And remember, Celsius has exclusivity. And so, that's always been, it's not, the UCC can, support the plan, and they have an investment bank, Pirello, and they have a big, decision making. But at the moment, Celsius is the one that has exclusivity over the plan. They know that they need a sponsor, and now they put it through a competitive process, and we got the stalking horse. So they will be making those analysis. And when you get the disclosure statement, there will have to be a full analysis of a Chapter 11 liquidation versus what they think the recovery of the plan could achieve. But it's also got to be subject to SEC regulations and, giving forward-looking statements and all the disclaimers. So that's a very, very tricky piece of work. It's why it takes so long for a company to go public, because all of the statements need to be fair, clear, and not misleading, even though it's a very, very hard task to achieve. So I do empathize with why these things are tricky and hard to do, especially in a compliant way with so much, scrutiny and retail investors that could, misunderstand or some of those things. Yeah, so that's really. I wish that we could just publish these and do a couple of spaces with all the plan sponsors. And then creditors have some kind of voting process for picking who they want, but the bankruptcy code wasn't written in that way. And so we will see in the end, and you get to judge whether you vote or not based upon that.
Okay, next speaker is Crypto KPR.
Hey guys, I actually have a couple, like a two-part question, and it's really, Simon, either if you have the answer, I was either going to give it to you or Manny, and it was really about the ad hoc for the earn account. What is the agenda? And the second part of that question is who pays for the legal fees? Do these come out of the estate when you're an official ad hoc?
Yeah, so let me give you what I know. And again, by no means an expert on this stuff. So the history of the ad hoc is that there is a group of the top creditors, and when the borrower agreement was being negotiated, they recognized that Earn does not have an independent interest, and the Earn and the borrower group and the Earn group are actually on the other side of a negotiation. And so some of the top creditors decided to fund and distribute new money, and then they partnered with a coordinator, which was Manny, and then they interviewed different counsel, and then they decided so the goal is to represent Ern's interests, and I won't speak for Manny. If Manny wants to come up again, he might be able to give more, Azad, but if he's not around,
Yeah, I'm around. Hey,
then
hey,
so that
Simon.
there you
Yeah.
are. Hey, Manny. Do you want to give the
I
goal?
can give a quick update. Then I'm really going to have to go. So yeah, what Simon said is right, and then it's a combination of those people, and there were a lot of we almost started an ad hoc a bunch of times, so we have a lot of the original people from the ad hoc, and so we were sort of rushing to file our notice of appearance and stuff. We actually have a lot more members than we filed on the docket, but we're going to have to disclose that in the next couple weeks. But yeah, I mean, basically, you'd asked about the agenda. I mean, the agenda is essentially to get fair treatment for Earn, okay? Now, we can debate what that is, right? Every group has something they feel is fair for them. We're deal makers, right? So we want to see the numbers. So what we've been doing, right, is trying to figure out, with the current plans, how much do those cost Earn? What happens if there's a preferred settlement? Does Earn pay 100% of a preferred settlement? Our position would be no. Others may disagree. But it's essentially to say, I think at a bare minimum, we would all agree, essentially, that Earn isn't accepting that it sort of equals whatever is left over, right? Like that we can negotiate and we have leverage. It actually, as Simon pointed out since early in the case, what is Earn's leverage, you might ask? It's property of the estate. Well, actually, that was appealed, and it's an interlocutory order. What does that mean? It means it's not that hard to overturn it if new evidence is introduced in the case. Okay, that's one thing. It means for now it's property of the estate. So we'll start there. So that's one argument we have. What's another argument? Fraud and misrepresentation. We have more of it than other groups. We can assert all of that, right? What's an example of that that's complex and annoying to deal with? Loans has something called 363.0 that's complex and annoying. Our complex and annoying thing is something along the lines of, I, Manny Herman, have a claim against Celsius Lending LLC. I'm an Earn customer according to Celsius's schedules. This is the sort of case we would say. This is on the docket, so I don't mind just saying it. Okay, so I'm an Earn customer according to Celsius's schedules, which I dispute. I have a claim against Celsius Lending LLC for breach of contract, right? The contract didn't say that my collateral was supposed to go into Earn. It said it was supposed to go into custody. So I now have a claim for my crypto against both entities, okay? This is annoying. This is similar to the arguments that Loans has in their adversary proceeding. Nobody wants to litigate any of this shit, right? So we all make a deal. Okay, that's basically the idea here. We want to be treated as equitably as possible. Different groups have
Manny,
different leverage.
sorry
We
to
don't want to use our leverage. We want to negotiate and get a fair deal for everybody that everybody's unhappy with and everyone can live with,
Yeah,
because
hey,
that's
Manny,
bankruptcy.
just
Yeah.
just to pause you real quick, just to kind of streamline this question. I
Yeah.
understand. I'm 100% pure earn, right, and we're the
Uh huh.
least represented, so I totally get all that. But
Yeah.
basically, my question was really more, geared towards the fact that at this moment we
Mm-hmm.
have an approval from the judge to Wyden case basically doing a class claim, right, on the
Yep.
behalf of all creditors.
Yep.
So basically, that opens up, civil and criminal, opportunities as well, but also non-contract against every entity, right? So now that we
Correct.
have
Yep.
that opportunity, and they're going to do a single swoop, class claim. How what is the value of the earns effort in hiring a law firm to kind of like what are you asserting, and what is
Sure.
the gain that
Well,
you're expecting is what I'm really interested in.
yeah. I mean, it's to have a voice in the final plan. Look, you can't have really a voice. You can actually get stuff done as a pro se, notwithstanding people say you can't. Like the judge said you can actually today. But look, what you can't get done as a pro se is negotiating in a plan. They're not going to take you seriously. Okay. So like we have this to have a voice in the plan. Okay? Like that's what the goal is here. In terms of
So no, I
we're
mean,
trying to get
like in terms of
a higher recovery for earn.
yeah,
I mean,
yeah. So that's what I meant. In terms
yeah.
of recovery, what are you guys like really like? What is the the end goal here in terms of recovery?
Well, we're going to look at different plans. I mean, from what we've heard, maybe there's 4 different bidders, and we have to have conversations with White and Case and Kirkland about the existing plans and the existing deals and everything else, right? I mean, we're doing that this week, but like,
I bring this up only because at this juncture, since we're so late, and look, we were trying to put our own efforts
I
to
wish
find
we were late. I wish we were late. I really do. Like this case is going into the fall.
Yeah, no, I understand that. But my point is that, like, at this juncture, right, it's a considerable investment because we've explored that option as well. I've been talking to attorneys myself.
Yeah.
But I'm always looking at it from a value perspective in terms of, like, is there really any sense in doing it now? And what is that? Like, what if we had to jump on board of this, right?
Right.
And people need to donate. What are we donating towards? Like, what kind? Because what would this advocacy bring us in the end? Is there a single cohesive plan of attack? Because if it's multiple things, then at this juncture, there's not enough time to do multiple things. You kind of have to have one single cohesive, plan, and then everybody needs to be in agreement on that, right? So, I mean, it doesn't sound like there's any single, angle here that
I
we
think the
have.
angle is getting us closer to equality, essentially. I mean, that's, you say a plan of attack. I mean, you brought up claims also. I can try to address that. So I think if I were to summarize, it would be getting us closer to equality. And we could debate what that means, but that's the general idea. If you ask about claims and White and Case filing claims, one thing that the judge would agree on, he maybe disagreed with the trustee that they can't bring claims on behalf of customers. He would definitely agree that the UCC doesn't represent EARN. So they're bringing claims on all customers, right? So if we want to bring claims that give more leverage to EARN, I actually wouldn't say don't file a claim. I'll get back to folks. I'm filing a claim. I wouldn't recommend folks don't file a claim. That's, talk to your own lawyer, make your own decision. I would disregard any advice that's not from your lawyer that says not to file a claim. You can make your own decision. We'll put out templates for that and stuff. Part of our plan of attack, right, is, I would recommend people file claims. I'm not going to sort of divulge the entire plan of attack, but I would recommend people file claims. And then the other thing is, you have your theoretical legal strategy, but really it's just negotiation. Like, so you have a credible strategy you can use, but that's not really the goal, right? Like, people probably know Loans has an adversary proceeding sitting there, and it hasn't moved at all, and they hope to never litigate it. So, like, I don't know. The plan of attack is just to have our voices heard in the plan and get something everyone can live with.
Yeah, cool. Yeah. We'll move on to the next one. Thanks a lot for that, Manny, and bringing that up,
Yeah.
Crypto Keeper. From what I've heard, two major goals is an ad hoc and have some additional look into the plan side and represent EARN's interest, and there is a negotiation between EARN and borrowers, and so those are two key agendas that I've heard. And just so you know, I'm not actually a member of the EARN ad hoc because of my position in various other things. Great. Thanks,
okay,
man.
We've got just under 15 minutes. Let's try and squeeze 3 questions in.
Okay, let's do that.
All right, so let's bring up Web Ferret. Been waiting a while. Sorry about that.
Hey, not a problem. Thanks, guys. Appreciate all Simon and the rest of the community does. Just a quick, note. I know the motion was approved today by the judge for the UCC representing the the entity of the urn, I guess base decided off of whatever class they determine. What's the potential that gets rejected down the road, and we're still back to square one where everybody has to file again?
So just make sure we're using the correct language here. Do you mean that it was approved that the class claim can be filed by the UCC for all creditors?
Correct.
And they can do the non-contract claims. Yeah, I feel underqualified to answer this one, but there was talk about, the Series B will come up with their next thing, and the judge was saying that there is, I expect there to be objections and additional process in that. So, but, the judge just wanted to get that done. He approved it, and then I think it goes through a round of objections, and then we move forward. But I think he really tried to make that process faster today.
Okay, next question from Watch Your Step.
Hey, just a quick one. Simon, you had mentioned the litigation trust. What is our connection post-bankruptcy? What is our connection to any recovery out of the litigation trust? Are we a part of that, or is that something we privately pursue?
Correct. We own it. So the litigation trust will be an entity with a specific purpose. It will hire its own board and have its own governance structure, which you are welcome to apply to if you want to be a part of that. And it will have various litigations that it will pursue and follow. And then it's its own entity with its own governance structure. And all recoveries will be entitled to all of its earners, which will be the earn account holders. And actually, I'm not. It's a good question of whether it includes. I don't think it does include custody and withhold, and don't quote me on that one. I think that's a good question. Maybe Tony Toggle knows the answer on that. Tony, would you be able to answer that one? Is the litigation trust, if you settle with custody, are you involved in any recovery from the litigation trust? He may be able to answer that one. But that's the simple answer. Yeah, the litigation trust is set up to pursue. Oh, there we go. Tony's in.
Whatever comes back from the litigation trust only goes to earn creditors.
Perfect. Yeah, so it will be 100% owned by earn. And there'll be a governance structure for deciding what to litigate and what to pursue.
Okay, next speaker is Lawrence Porter.
Yes, great job, Simon. You got over twice as many listeners as the court hearing did today, and I would say most of these are unpaid.
Yeah,
is it true? Is it true that Nova Wolf's one of the principles is where these machines are going to be hosted? Are you aware of that?
Do you mean TerraWolf or Beowulf?
Yes. But somebody who's an investor is the one who they're putting all these machines online with.
Yeah, I mean, you can imagine, and I won't be able to answer that question, but it'll be covered in the disclosure statement. But you can imagine if you were putting together a plan and you were investing money into a plan, and you were also heavily involved in the mining industry, you'd try and work out a deal between those different entities and disclose the conflicts. And see if you can benefit your other interests. But that would be in the disclosure statement.
Appreciate your efforts as always. I saw you had your hand up to speak, and the Judge Glenn orchestrating the way the trial went today was very orchestra-like, conductor-like. Anyways, that's it. I am thrilled with everything that's going on, especially this group that's talking now, and the thoughts and the thinking that's coming forward, right down to owning the rights to Mashinsky's book or whatever movie.
Oh, that's amazing. If you've got the approval of Lawrence, then something has significantly changed. That's amazing.
Thanks, Lawrence. Just one more question that was a DM to me. They're unable to speak, so I'm just going to ask this question on their behalf. So it's from Rect Celsius Victim. Hi, Azad. If possible, I have a question. What happens if I have already filed a claim in the past? I would rather my claim sitting under the class claim rather than my old claim, which is weak and not backed by a lawyer. How can I change this?
I think that's a really great question. I'd really not like to attempt to answer it. I know you can. Any claim that you submit overwrites any previous claim. That's something I know, but not legal advice. And so if you want to submit a new claim, then you can do that, and that would overwrite the previous. And then I think really the UCC needs to answer that one. I'm certain that the 28th deadline, something's going to happen there, depending on what happens. And I think you should really ask the UCC that question. I wouldn't like to answer that and give you misinformation. I reckon there's definitely going to be a way, though. You're not going to be penalized, but you will most likely have to take action.
Okay, next speaker is Victor.
Oh, thank you very much for everyone, especially Simon. I came into this space late. I have a very basic question. So some recent mailings from Celsius seemed very confusing to me. If I wasn't disputing anything and I didn't file any claims or anything, it made it sound like I now do need to file claims by April 28th. And I've heard advice from Simon and others that I should wait until more details are developed. If I don't dispute anything, do I still need to file something, or I could just sort of wait until the process goes to its conclusion, or do I now need to file, whereas before I didn't?
Yeah, what I'd say
Thank
is
you
you
all.
need to be ready to file on the 28th, which means thinking about it now and understanding the different information. But we don't actually know the answer to that, and it's moving fast. So each week we're giving updates, and you really need to tune in. But there's a possibility that if you don't file a claim, that you will be entitled to your claim on the coins, whatever percentage comes back, and the UCC will file a class claim for fraud and misrepresentation, because of this situation which will determine whether creditors get assets or shareholders get assets. And if you don't file a claim, or the UCC doesn't file a claim, you may miss out on some of the recovery. That was the motion, to file for the UCC to file a class claim on your behalf was approved by Judge Glenn today, and there'll be further objections, which I think would lead to the 28th deadline being changed. And we don't really have the answers, unfortunately, for you right now, but you should be ready to file on the 28th, knowing that it's highly likely that you may not need to. But also, if you want to actually seek a lawyer, Manny's advice was he'll be filing a claim anyway, because there may be additional things on top of what the UCC is filing a class claim for that you may want to be entitled to. You may be involved in a liquidated loan or something, and you may have another special interest that you believe needs to go in there. But I'm really not qualified to answer that. It's definitely a lawyer question. But those are the different dynamics in understanding that. Sorry, I can't give you a straightforward answer.
Okay, next speaker is Baklava.
Hi, thank you very much for taking time for my question. The gentleman before Victor pretty much kind of asked the same question I had. I received the schedule from Celsius. I'm just an earn account user, and it just says that if I don't need to dispute what was mailed out to me showing what coins I had, basically my question was the same as Victor's. What do I need to do at this point? Should I just wait till the 28th to see what new information comes out, or is it in my best interest to file a claim now?
Yeah, so the simple, again, I'll repeat it in a slightly different way, but the simple answer is on the 28th, either if that bar date still exists, then either you want to file non-contract claims for fraud and misrepresentation, and the UCC released an FAQ to support you in that process, or they're going to launch a class claim for you. And so one or the other, you most likely want to do that because you may lose certain value and you want to maintain that value. So by that date, you want to, if the bar date still exists, one of those options you probably want to take, and we don't know which one, whether the UCC's, but it was approved today that they can, but it may be objected and the bar date may move.
Okay, let's try and squeeze two more questions, one from Orpheus, and then we'll do one more DM, a good question, I believe. Okay, Orpheus?
Yeah, thank you for taking my question. I was, this is somewhat good news, I guess, for the EARN class. Um, are people planning on putting up some type of or like, if, for example, Manny, if there's additional claims that we feel like the UCC is not going to put forth, like, are we going to be able to see their claim and then identify maybe additional claims that they didn't put forth, which will allow us to file those additional claims? Or are they going to file this in a fashion that doesn't give us that opportunity to kind of reconcile with the rest of the community, to come up with any additional ideas or evidence to help support any additional claims that the UCC hasn't or will not file? Is anybody, or Simon, are you familiar with the process in terms of how that might play out?
Yeah, so just because the UCC files a class claim for a very specific thing, my non-legal advice understanding is that you can still file a claim for anything that you believe you're entitled to. So if you still want to engage in that process, it doesn't overwrite, my understanding, your ability to have other claims. And so you should be filing for whatever you choose. And I think we will get to see what the class claim is before a decision needs to be made on those specific things, or to be determined. But it's a good point.
Okay, one more question. This is a DM. What classes will UCC send fraud claims for? Will they only send claims for fraud, or what about other classes like loans? I bought sell token OTC. Will they be able to submit fraud claim for creditors like me?
Yeah, my understanding is yes. So a class claim, I believe, refers to all creditors, whichever group you are in, unless you've settled and you no longer have such a claim. So if you're a borrower and EARN, I believe that the class claim would be filed on your behalf.
Okay, I guess a closing statement or final thoughts.
Okay, so we've done the 8:30 hard stop. Today was a big win. I pinned a couple of threads if you want to actually see the court dockets or just the TLDR. One was a thread that I created yesterday or a couple of days ago that goes through all the different documents and objections that happened before the court hearing. And the other is a bunch of threads from the court hearing live. You're welcome to go through those. Also, fellow creditor Aaron Bennett, he normally goes through them and does a much better job of condensing 2 hours and AMA into something that's much more easier to understand and consumable in about 10 minutes. So usually look out for that. And yeah, we now, I believe, have a good understanding of the different battles that are still to be left. In a quick summary, for those of you that didn't watch the beginning, go back to the beginning. We'll upload this on YouTube in a day or so, or maybe tonight if it all renders. I'm not sure. But there is an ad hoc group representing the borrowers and the EARN that will be engaged in a negotiation that will lead to an understanding of, moving forward with an EARN plan and a borrower's plan. Withhold settlement was approved, where you get 15% on top of EARN and become an EARN creditor. Custody, you need to settle by the 24th. And that is currently going through the process. If you were in pure custody, then you should be withdrawing. And I think they're in the process right now, and you can be withdrawing that. And there is a new ad hoc that is I broke, which will be funded, I believe, and a member of representation is Alex Mashinsky, that will be representing the sell token holder interest. And there is a shareholder versus creditor ongoing plan and litigation, plan of attack. And today, the first step of that was approving a class claim for fraud and misrepresentation against Alex Mashinsky and other insiders, which will be a vital part of your recovery. And so anyone that is trying to disprove the examiner report or trying to stand against creditors by standing up for Alex Mashinsky, then they are doing a disservice to creditors right now, and you should really question their intentions and why they are doing that. And so please do so. And I'll see you, as always. We'll schedule in a space for next week. I'm sure it's going to be action-packed. I mentioned that there are 4 bids, and that was confirmed in court today. One is from Nova Wolf, and then it will enter into a negotiation where everyone's in the same room and they have to improve their terms in order to give creditors the best result that they can possibly give. And we will have a disclosure statement either on the 28th of April from Nova Wolf, or that will be delayed because they're extending the deadline in order to release a disclosure statement with an alternative bidder. They did confirm that in the end, all bids will be published so everyone can see them, but they won't be published while it's in the negotiation stage and phase. And I will continue to do what I can to try and get as much transparency that helps that process. And I'll continue to post updates on Twitter. But in the coming weeks, we are getting closer and closer to understanding all the different parts of the hellhole that we've been through over the last 9 months. Again, if you're managing your expectations, I'd say plan for not receiving any funds until the end of the year, and hopefully we can do a better job. But there are several objections that are coming through that can slow down the process. Primarily the spanner in the works by Alex Mashinsky, looking to protect his reputation and cause a bit of havoc and hoo-ha in the process based upon his interests. And we have that all to look forward to in the coming weeks. So thanks a lot, everybody. And I'll see you in the next one. Bye-bye.